The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 5th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, you can send me an email, as Mike did, at steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 165 points. She's printing out at 20,854. S&P is up 16 points, trading at 2377. The NASDAQ is up 37. The NASDAQ, the NDX 100 is up 37, as well as the NASDAQ Composite. Russell 2000 up 5 points. Semiconductors up 0.1%, up $9. To the downside, nearly 0.1% to the downside is gold, off about $11. Silver's down 15 cents. Light sweet crude is up 15 pennies, trading at 51.18. Leading the charge here stock-wise to the upside, you got Priceline up 16, Amazon up 14, Quaker Chemical up 11, AutoZone up 9. BlackRock up 5, Intuitive Surgical up 7. To the downside, it is market taxes down 5%, $5 and change, 3% to the downside. Credit Acceptance Corp off $3 or 1 7/10%. Applied Opto Electronics down 6% or $3 out there. So we've got some things to look at, but I want to look at what you want to look at. So, for example, Mike sent in an email request, asked if we could go take a look at Snap, Crackle, and Pop. So if we take a look at Snap out here, first, Mike, if I put the daily chart, because this is a IPO that came about on March the 2nd, there's really no data here, my opinion. There's not enough data to really provide you with information on a daily time frame. However, what you and I can do, excuse me, is take a look at a shorter term time frame. At least this way, we'll be able to get some market profile data. Although, let me see here. What is the this is giving me. Let me do this. I don't want to screw that up. I just want to get rid of the intraday trading time frame. So let me get in here. Let me edit this chart. Let me change the time on it. The time template, U.S. East Coast regular trading hours apply to this thing. There we go. Should have done that before, but I didn't. Oh, well, now we can go ahead and put the 30-minute chart up here. There we go. Now we have a better view. Let's see what kind of profiles, if anything, pop up on our screen out here. And let me add another tool to this as well for you, Mike. And the tool that we're going to go ahead and add is the A to B equals CD tool out here. So let's add that, because right now this looks like an A to B equals CD to the downside. That's the pattern that is in play here. Your A point out here on the 30-minute chart came in at 1:30 in the afternoon back on March 27th. Your B point out here is about 9:30 on March 29th. And it looks like the swing point we would use, let's see, the high here is 22.55, and here we go, we're 22.70. So that's it. X marks the spot for our C point. So what this equity is doing on a 30-minute time frame best that I can provide you with as far as information, looks to me like this wants to head down to $19.83 out here. And at $19.83 makes a lot of sense, right? If we just take a look at a little bit of a gap up out here on March the 20th. There's a slight gap up here on March 22nd. But it looks like, now let's take a look at the volume. 30-minute volume as the B point was being passed. And that was at 9:30, March 29th. Volume there, 6.4 million shares. So this was passed about an hour ago with light volume, 2 million shares, 2.5 million shares. So what you want to watch is the 21.83. I know you mentioned that you thought that this might bounce to 21. You know, if it gets back inside that swing point, that range out there, it doesn't mean that the A to B equals CD can't complete, but your preference is, because it's on light volume, is to see it stay below 21.33. And if it does that, then you're looking at about 19.83. Unfortunately, in a equity like this that has such little data, there's really not a whole lot that I can provide to you other than that, other than the pattern intraday, what's going on. If you look at the daily chart, really, I don't know. Here, if we take a look at the swing point that was passed on a daily basis, let's do that. 31 million shares back on March 29th. And so far, you're at 14 million shares. Seems to me like we're passing that level with light volume out there. So best of luck to you on the trade. That was for Mike, and that was looking at snap, crackle, and pop. Now, let's go take a look at the markets out here. Where do we want to start when we take a look at the markets? Well, I think where we start, as always, as usual, is let's go get a feel for what's going on inside the equity futures markets out here. Specifically, we're going to take a look at the NQ. We took a look at this yesterday because we had a brand new market profile that formed out here. Here's what we know about this market profile for you that folks that didn't tune in yesterday. What we know, because we're going to go ahead, we're going to turn price off. We're going to turn the weekly profiles off, and what we're going, I can do that another way. There we go. Boom. There we go. The weeklies are up. Because the center of this box, the point of control, really not in the center, closer to the top of the box, this says 54, 55, should have been the lid, should have been able to contain price. The mere fact that price is above it says, hey, this is a strong, bullish move out there. It is really that simple. So now we take a look at it. Where is price going? Look, if price today closes above 54, 55, then we have to start taking a look at any other patterns that might be out here. Well, we'll go take a look at the daily chart. We are looking at the daily chart. We're looking at a different daily chart out here. And one of the things that you and I know at this stage of the game, I'm not so interested here in the mere fact that this may be a seventh wave move to the upside, or it might even be just wave number, 3 out here, the upside. I'm more interested in the mere fact that price is continuing to rise and doing it with less energy. That's why you see that diagonal line on my chart out here, black diagonal line. Now, the key here, price is above my red line, my oscillator and change line. That means the price oscillator on the bottom is actually ticking to the upside. That's bullish. It's above zero. No question about that. But we do not ever ignore the fact that price is rising with less relative energy. Now, the key here is this pattern doesn't mean diddly until we actually see a bearish reversal signal, similar to what we did here a couple of weeks ago when we got to this nice little bear sash candle, bearish engulfing, looks like a key reversal, the whole 9 yards. It's actually the top of that candle that now becomes resistance. That's the one from, looks like, March 21st out at 54.41. That is support. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go finish off the NQ. We talked about how it is above resistance levels, and as long as it continues to close above the 54-55 area, price will move higher, irrespective of the fact that we do have price moving higher, doing less energy. So that means you're always on the lookout for the cavalry, the bearish cavalry that could arrive. When it does arrive, then it's a different message. Until then, we would take a look at a price projection, and the best price projection tool that I would take a look at is the one we have up on our screen right now. Take a look at these horizontal trading range boundary lines. Right, we're up above all types of resistance on the left-hand side of a chart out here. So then we start taking a look at these horizontal areas. You know, we have horizontal levels with regard to our market profiles. These are totally different because this here is taking a look at all of the data. This goes back, I don't know, it goes back to, how about if I just say pretty far back? I don't know, where does this go back to? It's 1999. There we go. So it takes us all the data from 1999. Now I've got it in a weekly time frame out here. Let's try to widen this up a bit, make it a little bit easier for you to view. And where price is headed to is likely 55.30. So that is the top of its next daily box. You're at 54.78. So the 55.30 area becomes really its next target. You clear that, then it's 56.21. But the daily boxes have been pretty good at holding price within a few bucks out here. So watch for the 55.30 level for the NQ. With regard to the other equity futures contracts, ES Mini, it's a pretty easy call now in that price is over and above with some conviction behind it above the TAS daily profile of 23.56. So looks like 23.97 becomes its next target. 97, you're at 56 right now. So you've got a fairly nice move inside of the ES Mini. If we take a look at the Dow, well, the Dow is up above. As long as it can clear 27.57, then it's going to soar and become instead of a 7.57, it's just going to be a 7.77, a real jetliner out there, and take price up to the 21,106 area. That is the top of its weekly box. That's the message as of 1:20. Inside the Russell 2000, this is a lonely soldier out here, struggling. Had a nice move earlier on in the day, gave back a lot of those gains out here, did what it was supposed to do, sort of, from a bearish standpoint, which was get up and tag the TAS weekly point of control level at the, what is that, 1383, and then it did the reverse out here. It's not bearish yet. It would be if it were to close underneath 1367. So maybe just consolidating sideways out here, but not the, this is the, if you were looking to take the bearish side of the market trade, it's clearly here inside the Russell 2000. When I say clearly, it is this is weaker than the other three equity futures contracts. So that's where prices are headed to inside of the Russell. Just tagging that 1383 level is likely its next move as the market, should the market continue to gradually move higher. On the intraday charts out here, 30 minutes time frame, for example, let's see, it looks like we're now beginning to get that price relative strength divergent pattern that formed the bottom back here yesterday morning. So now we may have one of those setups. Again, this is more intraday, forming at the top. Little shooting star, but we've got 8 minutes before this candle actually confirms. So that's on the 30-minute NQ chart. That's worth paying attention to. Of course, if you were to pay attention to it, you'd stay within the 30-minute time frame chart out here. Nothing on the ES from a topping standpoint, topping pattern standpoint. And since it's really the NQ that is breaking out of, above everything, we'll pay attention to the NQ. Here's the Dow 30-minute chart. Nothing out here as we speak right now to suggest that there is some kind of a top in place. And in the Russell, again, there's a little bit of a delay in this chart pattern out here. I don't have anything on a 30-minute basis other than the brand new profile that is formed out here, but nothing that shows us that a top, in essence, is in the marketplace. I have a request out here from Danny in Atlanta. How high can Amazon go? Well, Danny, that's an excellent question. Let's see if we've got enough data to maybe try to answer that question. AMZN. So we'll do this live versus Memorex out here. Let me pull this back. Let me just take a look at something. The problem in whoa, what the heck was that? We're going to go ahead and delete that. I'll tell you what I'm going to do, Danny, so I don't have to do this here during the show, and I can do it during a break instead, is I'll try to see if there's enough data for us to get some decent horizontal trading ranges on it. And the reason being is because when you have something that's just a big hockey stick and goes straight up, you've never created levels out there. So there are times when the horizontal trading range tool just simply doesn't work. But we'll try to do it that way to figure out. With regard to just Amazon specifically, though, if we do take a look at what it's doing on a daily time frame out here, let's see how it's rising. Hey, no problems. It's rising with strength, so we don't have a price relative strength divergent pattern inside of Amazon. Today is going to likely be not today. Maybe tomorrow could be a TD sequential 13 count out here. We don't have anything to suggest in the case of Amazon that any type of reversal type pattern out here. Let's take a look at Tom DeMark's. Maybe if we take a look at his expansions of swing points, but that alone is not a reversal signal. So the daily looks pretty good out there. Weekly, let me just put the weekly time frame for you, and we'll see if this is also moving higher with strength. AMZN again and on the weekly it's not. So the weekly, let's just go take a look at wave counts out here. We'll start from back on February 12th. Well, you don't really get to wave number 8 out here. So we're just going to start from this swing point here. And you're either in 6 or 5. But price is moving higher. Now, last week was a TD sequential 13 count, Danny, and price has overtaken that area. It's still active, but there's nothing more bullish than failed bearish patterns out here. And unless Amazon closes below 875.41 at a minimum out here, it looks pretty positive, although it needs to get a little bit more energy. You see, when price moves higher, it does with less relative energy, we really pay attention. Last time on a weekly basis that this meant anything was when the bearish reversal signal candle formed back on January 8th, 2016. Price had been moving higher, doing with less relative energy, and boom, voila, you get this nice little falling window, a gap to the downside, bear separation line, the whole 9 years, and then we saw a little correction inside of Amazon. We have the potential for that pattern to set up, but we don't have the signal yet or the confirmation of it. So that's on Amazon. The last thing I'll do as we go into this break here, we'll go see, because your question was how high could it go. We'll go see what the next level is, or we'll try to see what the next level is. But I want to hear from you folks, 877-927-6648, or you can send me an email, mental telepathy, steve@tfnn.com. Dow's up 167, S&P up 17. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So during that break, I went ahead and pulled up the chart for Amazon, taking it all the way back to the data that I've got back in 1997. And we can see that, that real kind of hockey stick, straight up move since 2009 inside of Amazon. But there were enough resting spots for us to go take a look at some horizontal trading ranges. Now, the green lines on here are weekly. The red lines are referring to monthly. The little dashes are the midpoints of those time frames out here. So what we can see is from a weekly standpoint this week, Danny, if price closes above 911, you're at 922 right now, then price should go to the next level. The next level with regard to its horizontal trading ranges, the midpoints take into the 984 to 1011. And that's what, as long as price stays above 911, that's really what it would be signaling to you. If price comes back below 911, it will have failed at a natural resistance area. Then it says price then can move all the way back into the 838 type area for Amazon. So price targets right now, 984, then 1011, and then above that, the next one would be 1057. Sounds like Bezos is going to pocket some change out there. Okay, what do we want to take a look at next out here? Let's go take a look at some other things that are moving and grooving in the marketplace. Let's take a look at light sweet crude, only up 19 cents out here. Let's go see where this thing is being deflected, if at all. And, well, it's being deflected right here at its TAS weekly profile. Now, obviously, it's daily chart that you and I are looking at, but it does show the fortitude. Can I use the word fortitude? It does show the significant resistance. Hey, how about that? That's pretty clear thinking or speaking. 51.16, we're trading at 51.21. So you close below 51.16, and that says, hey, you got your work cut out for you in order to get above that. If it gets above that, price ought to head into the 53 area. But right now you're really trading right on it. It is resistance. It is true. What happens if it fails here, meaning it gets back below the 51.16 area? Then, folks, there's no reason for it to not get all the way back to test 48.89. That is on light, sweet crude. Let's take a look at Goldilocks. I know there's got to be questions out there to say, hey, where is gold headed to? Well, here's the good news and the bad news. And all of the news out here with regard to gold, the real news, right? We do not have fake news around here. We just have the real McCoy. And if we take a look at the real McCoy when it comes to Goldilocks, of course, there could be more retracement in it just by taking a look at the mere fact that price is trading right now below Stevie's red line. That red line figure looks like it's 1258. It's 1253.50. So just by a few pennies out here, a few dollars, but it closes back above 1253.50, then everything is okay in Camelot. But if it closes below it, says there's more retracement in order for gold. Now, in the case of silver, with regard to its oscillator unchanged line, it is stronger because it has not yet tested it. So where's silver headed to? 1808. Of course, these numbers are going to change slightly. Is there anything wrong here? That price oscillator, you can see that's like panel 2 and 4 in my chart, are still above zero. So it just says retracement, doesn't say adios, get out of Dodge, or any of those things out here. But if we take a look at where are we at with regard to market profiles, this is where it becomes a little bit of a stinger out here. And the stinger here is that we know that price has found, just like we looked at light sweet crude, the case of gold, it shows you more clearly the importance of that TAS weekly profile at 1260. You that has been acting as a strong resistance out here. Now, the big problem inside of gold, you're below Stevie's red line. That could have been, should have been, and at the moment is not a level of support. So now you're below that. It says more retracement could be in order. In this case here, we take a look at the market profile, says 1220, and you are at 1248. So another $28 or so to the downside is possible out here. If we take a look at silver, let's go see what its message is, off 13 cents, about 0.7%. This here, with regard to silver, the message is, hey, maybe it pulls back to 1797 to 1805, something like that, before it then resumes onward and upward move. So I would say we watch silver. We keep one eye on gold, but we keep two eyes on silver out here because it's the one that should find support soonest at $17.97. Of course, both of these are fueled by the Japanese yen. If we take a look at it right now, up 6 600 pips out here. Trade out at 111.29. I do believe I have a 15-minute delay on that, so we know that is fake news, not exactly accurate out here, but very much likely. Very much likely. Are you kidding me? Did you just get out of Dodge today? I don't even know that, but hey. 111.67. That's what I know. That is likely where the yen is headed to. That should put some additional pressure on gold and silver. So at this stage of the game, looks like a further pullback. Now, how is that impacting the mining equities out here? Hey, not too shabby. If we take a look at the GDX, you and I have talked about this for the last several days out here, and it's trading in a range, and that range is still in place out here. That range being 22.56 all the way up to 23.61. The volume today on the retracement, only 23 million shares. I say only 23 million shares. It made its most recent swing point low with 44 million shares. So pulling back with similar to lighter volume out here. Everything looks okay inside of the GDX. Of course, that is likely because let's go take a look at Barrick Gold out here, see what she is doing. Again, pulling back, volume of 5.9 million shares versus 8.6. Well, so this is actually pulling back into its most recent swing point, that being March 30th. With similar or more volume. The problem is it's really, here is your level of support. That is the March 15th area that has 23 million shares to the upside. So again, just identifying the consolidation that is inside the mining equities. What else do we want to look at? So we've got, we've taken a look at, come on, in the den, pump me up. Tell me what it is you'd like to look at. That just makes it a lot easier than just randomly picking out madness. What do I want to go take a look at for you? You know what we should do? Let's go take a look at some of the ETFs. How about that? We don't do that. Let's take a look at the XLF. I know somebody was saying they were just about to write in and say, hey, let's go take a look at the XLF. Let's go take a look at the XLF. Let's go figure out what we know. Up 18 cents, 48 million shares out here, running right into the top of its TAS daily box out here. That could be resistance. Last time up was on the 30th with 92 million shares. So you're moving up with light volume so far, 49 million shares, similar to light volume. If it is able to close above 23.93, then, and only then, would we take a look at the 24.11 area as being the level that it would attack out here. Now, if it attacks and rejects that area, then that, in essence, could be the C point of an A to B equals CD to the downside. That's what this chart is communicating to you and I. If we take a look at Stevie's other charts out here, we're going to see that price ran right into Stevie's red line. That acted as resistance out here. So, and the price oscillator, you can see the bottom portion of my panel is down below zero. So if it can't take out its a TAS daily high, if it can't take out Stevie's red line and starts to turn to the downside, well, then that A to B equals CD, that C point may already be in place. That's inside the financials. And that says look out below. That says you're looking at 2167, 2109. It's Chief Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Dow's up 160, S&P's up 16. Lauren wants to go take a look at rigatoni. R-I-G is the ticker symbol. And the question is if we can take a look at it on the 5-hour chart. We can take a look at it on any time frame that you would like out here. But the time frame that I would like to look at first is the daily chart out here. You talk about a equity that is hammered out a bottom out here. You have a nice little hammer candle, Lauren, that formed back on March the 10th, right at the bottom of its TAS daily profile. You've got another hammer out here on March the 20th. You've got another hammer on March the 27th. This thing has hammered out the lows. Now, today, you're up with 7.6 million shares going into this bearish engulfing candle from March the 16th with 18 million shares. So you're moving into a swing point with light volume. What does this say to me? This says rigatoni is not getting ready to take out that 13.18. It just doesn't have the energy. So right now, you are locked into a trading range from 13.18 down to the 11.95 type area. So if you're in it, do you get out? No, I don't think so out here. I mean, I don't know what your trading plan might have been. But you clearly know that you've got the troops and some support, in that 11.95-ish area out here. But it just doesn't have the oomph today to move higher to get above that swing point. And that kind of takes you back into the light sweet crude area. If light sweet crude was able to get above its TAS weekly profile high, and I'll go back and revisit that for you, then maybe that goes ahead and it pulls Transocean Limited to the upside. Now, the upside inside of Transocean is a brand new market profile, weekly profile that formed this week. And that says that 1380 becomes your target, your profit target, your resistance, your next resistance. And price should be able to get up there over time. I say that because the weekly profile happens to be structured from a bullish standpoint. So price should explore the 1195, which is already done, all the way up to the 1380. It just ain't going to be today, or most likely will not be today. That's what the daily chart is saying. The problem with a 5-hour chart, and I'll put the 5-hour chart up here, 300-minute, is that the daily chart is 6.5 hours. This is 5 hours. So my preference with regard to intraday charts for you would be to go take a look at a 30-minute chart out here. But nonetheless, on a 5-hour chart, I can go look at that swing point, 1.6 million shares. See, the problem is I don't know what time of the day. What is that? That's 5 o'clock in the morning. Oh, I've got this set to, so I got to go back here. Let me do this here. Is really set to the futures. So it wasn't there. It was here. There we go. With Snap, right? So this chart here. So let me put rig on this. Let me go ahead and put a 300-minute time frame. There's our 5-hour chart. That way I'm getting rid of the pre-market, post-market info. And so on a 5-hour basis, okay, so that began at 9:30. That had 9 million shares and 7.4 million shares for the 9:30 time frame out here. But this is going to end in 45 minutes, right? So that 5-hour time frame is not going to, even a 5-hour time frame, same type of candle formation, not enough volume. I would say the 30-minute chart might be a better time frame to look at for equities that are basically trading between 9:30 and 4. Now, I've got daily profiles out here. We don't really want that at all. So what do I got to do? What am I going to do out here? Well, I'm going to go ahead and change this up for you. So we go take a look at what those 30-minute profiles say. Let me add a tool, and then I'll be right with you. Add the tool. Where is it? There we go. So now we're going to go ahead and see our 30-minute market profiles. And the problem here, nice open for sure. Big open this morning, 2.1 million shares. You pulled back with to test that same open with 640,000 shares. So that was a nice little intraday trade out here. Support is likely this morning's low, 1261. So I don't really see anything significant out here. It's just a long way below, with the top of the profile box of 1240's long way. A long way. It's probably half the gains if you got into the $11 area, $12 area for you. And anyway, I hope that helps you out. Lauren, thanks so much for writing in. If there's something else that you need to know for RIG, Transocean Limited, just go ahead and send me another email. Just checking those emails here real quickly, see if anybody else has sent something to me. I've got something here from the Olive Garden partner. I have no idea. Do you have any idea how you guys get some of these emails? I have no idea. Have I ever searched the web for Olive Garden? I think not. In fact, I know not. Not that I have anything against, somebody going to Olive Garden and getting, we, of course, it started down here in Florida. And so we kind of call it the Olive Pit. But that's a breadsticks. Yeah, you can eat as much bread as you want, and then you can just become the Michelin man out there. And you have that never-ending salad bowl and breadsticks out there. But, I'm not saying that it's a bad place at all. I've just never searched on it. Don't have no idea why I have Olive Garden partner like 1, 2, 3, 4, 5, 6, 7, 8. What the Sam heck? Maybe we gotta create something so that kind of, the problem is, I literally, sometimes on the weekend, I won't even look at email. Maybe I'll check my phone out, but a lot of times just to get away from, the noise. And if I'm gone for a day, and on the weekends, I don't know about you, but for me, the junk email that comes over is lighter than during the week. And still, I'll end up with 800-900 emails, most of which are sitting in a junk box. So then, when you sit down, what do? I just junk them all. And that's why I try to take a quick scan. So if you are sending me an email, I always like to get to it. If I haven't, my apologies somehow. Your ISP said to my ISP, hey, this looks like junk, but make sure you put in there, Trader's Edge, or if you're a subscriber, Mastering Probability, or just something in big bold so that just stands out in that heading, and then I'll know to grab that from the old junk box out there. Hey, you probably didn't need to know that, but actually you needed to know that because you might have sent me an email. Lo and behold, you didn't get an answer, and you said, oh, what's with this guy? He doesn't send me an email. All right, so I don't see any other emails other than from the Olive Garden partner. I have no idea what it is they're requesting there, but I'm not going to click on it. I can tell you that. It is headed right to the trash basket out here. So what do we want to look at next? We did start taking a look at the ETFs of the S&P 500. Let's go do that. Let's continue doing that until otherwise requested out here. So that was the financial sector. Didn't look too hot. Let's look at the healthcare sector, XLV. Let's go see what kind of message we've got here. The XLV, trying to make it up to the 75.16 area, has gotten up to the top of its TAS daily profile. So it's explored the box, but at this stage here, there's no reason for this to not continue headed lower. It closes above 75.16, a different story. But until then, it's not really giving you the strongest bullish message out here. A whole different story. We take a look at technology, XLK. It right now today is trading above resistance, both Stevie's red line as well as that bearish engulfing candle for back around the 20th. Let's go, and it had a little TD sequential that it is now trading above as well. Let's take a look at it on this chart here because we're going to get better data from the standpoint of volume. So let's go see if it's volume, schmolume, or if it's the real deal out here. So, we also see the weekly profile. Hey, the XLK, it closed about 53.66, especially if you were to do it on more than 14 million shares, which you're not going to today. Watch the 53.66 level. You test it, you reject it. It was a test on light volume. Could be heading back to 52.56. Steve Rhodes from TFNN. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Say the last sector that we should take a look at. It doesn't have to be the last, but we're just going to call it the last at this stage here, is the consumer discretionary sector. One of the things I noticed is it does have some volume in it. Then we'll go to the golf guy and take a look at the GDX and see what question maybe I can answer that I didn't already. But if we do take a look at the consumer discretionary, right now prices trading above daily, weekly, market profiles, those being 87.58 for the weekly, 87.75 for the daily. That's good. Its most recent swing point just a few days ago at 2.3 million shares. We're at 2.1. So this is moving with volume. On a weekly basis, now we just got to do an estimate here. We're in hump day. So we just multiply times 2. That gives us to 25 million shares. Last week was 20 million shares. So it looks like the move here is the real deal. There was already a confirmed A to B equals CD to the upside out here, a big one. This gives you a price projection out here. It's a daily chart that we're taking a look at. That price projection, let's go take a look at it, is right around the 91.40 level. You're at 88.16. Looks to me like the consumer discretionary sector, that being XLY, headed to 91.40, maybe even 95.42 over time. Everything in here is clicking. And I do mean clicking. Now let's go see what the golf guy wanted to take a look at out here. So Steve, great show. Just say, check me if you would. GDX similar to the Diamond and Spies in that they follow all stocks in their universe. GDX, whereas the Nugget and JNUG 3 times follow the Van Eck miners and junior miners that hold the individual stocks. That sounds about right. Thanks. Dunkin' Donuts. Steve. So let me see here. So the GDX is really following the HUI, and the Nugget is really following the GDX. Does that help you out there? I hope that helps answer your question. The most important thing, though, is truly to understand the weighting, right, inside it, right? So if we go take a look at, of course, I say right, but you might not say right, but I'm saying right. Right here, like every ETF, not every ETF, like many ETFs, they are weighted. And that means you always need to know what the current weighting is. Now, this weighting that I have here, the order of this weighting, where is it? Oh, it's not here. I'll be a son of a gun, Okay, so I used to have the weighting inside of, and I'll make sure that I have that next time, because this is not the weighting. This is in alphabetical order. So I just always would put the weighting of the mining equities so that you could take a look at the top 10. For example, as an example, inside of the GDX, this much you and I can do. We can go take a look at inside the GDX what the current weighting is as of last night, right? And we're going to see Barrick Gold is going to be number 1. That represents 10%. So it's really important to pay attention to, if you're trading this, and in fact, the top 10 holdings represent 59%, 58.93 to be exact. There's 52 equities inside here. Some are overseas, so you may not be able to get the actual chart to see what they're doing. But you're looking at Barrick, Newmont, Goldcorp, Newcrest, Franco, Nevada. Just between those 5, you are at 10, 27, 33, 42, 40. Yeah, you're like 42, 43%. Just for the top 5 out there. So you want to be paying attention to Barrick, Newmont, Gold Corp, Newcrest Mining, Franco, Nevada. To round out the other 5, it's Agnico Eagle, Silver Wheaton, Rand Gold, Anglo Gold, Ashanti. You got to like saying that name. And Kinross Gold Corporation. So always pay attention to what at least the weighted, the top 10 are doing inside of any ETF that you trade. Otherwise, just trade the equal weighted. Like in the S&P 500, it would be RSP, I believe it is. Hey, stay tuned. Your buddy and mine, our favorite polar bear, David White's up next. Tom O'Brien from 3 to 5. Have a wonderful Wednesday. We'll see you on terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.